The commercial banking sector at the moment has undergone and continues to undergo significant change. If we were to look at the media headlines, we can see a lot of contradictory messages from banks returning massive profits to other banks actually exposing enormous levels of debt. So I think one thing is clear at the moment is we're going to see change ongoing, especially as over the next months and years we move from a situation or an environment of government systemic support to regulation. So it's a sector we need to be aware of as property professionals, as it's a very significant part of our market. So in research, we've been continuing our work on the future of office demand in central London. And so I've undertaken interviews with the main central London commercial banks, the biggest banks, to understand what's going to be changing for them in the short and medium term. For investors and developers, it's vital to understand how this sector is going to change because it's a very significant part of our property market. From the conversations I've had, some strong themes have come through around growth, around the impact of regulation, around what they need from their property space going forwards and the specification of that space. So what size trading floors should we be building? What size operations will they want ongoing? Also, it's necessary to understand a bank's appetite for risk ongoing because that will impact the headcount that they have. So through this work we have answers to these questions and therefore the implications for your markets in central London.